Three currency systems have existed in the last 100 years: physical cash, credit cards, and central bank digital currencies. The first gave you anonymity. The second gave you convenience. The third gives government complete control over every dollar you spend. 24 countries are launching CBDCs between 2025 and 2027. Your bank account is about to get an expiration date, a kill switch, and a social credit score attached. March 2023, Shenzhen, China. Zhang Wei walks into grocery store. His digital wallet shows 5,000 yuan. He's not broke, but when he tries buying pork, transaction gets declined. Screen shows purchase restricted, social credit insufficient. Not because money doesn't exist, because Communist Party decided his social credit score means he can't buy meat this week. His money, his wallet, their control. Absolute. This isn't theoretical. China has 260 million people using digital yuan right now. Largest CBDC implementation on Earth. And it comes with 5 control mechanisms built into system design. These aren't bugs, they're features. Intentional design choices every CBDC everywhere is replicating. Welcome to Financial Shadows, exposing CBDC control mechanisms destroying financial freedom. 5 control systems. 3 implementations already live. 1 outcome. Your financial privacy dies permanently. Currency doesn't just change form, it changes who controls it. Cash was yours. You held it, spent it, saved it. Nobody tracked it. Nobody approved transactions. Nobody decided if you deserved buying food. Credit cards introduced tracking, but banks were intermediaries. You could still withdraw cash, move banks, choose freedom. CBDCs eliminate that escape completely. Which control mechanism worries you most? Transaction approval, expiration dates, or geofencing? Comment below.
5 control mechanisms embedded in every CBDC. China tested all 5 successfully. Europe copying the blueprint. America building infrastructure now. Control mechanism 1, transaction approval. With cash, if you have money, you spend it. Transaction automatic. Cash changes hands. Done. With credit cards, banks process transactions. Generally, if you have balance, you can spend. With CBDCs, every single transaction requires government approval. Central bank computer checks. Is this purchase allowed? Is this person allowed? Is this merchant approved? Is this amount within limits? It decides. Yes or no. Instant. Automatic. Every transaction, every time. China blocks purchases daily. Socially harmful products get flagged. Alcohol if you bought too much recently. International transfers if social credit low. Travel bookings if you criticize party online. Digital yuan doesn't ask why you want to spend. It tells you whether you're allowed. Control mechanism 2, expiration dates. Cash doesn't expire. Dollar bill from 1950 still spends in 2025. Holds value indefinitely. That's what makes it money. Store of value across time. CBDCs can expire. China tested this during COVID stimulus. They gave citizens digital yuan with 30-day expiration. Spend it in 30 days, or it vanishes. Not loses value, vanishes. Deleted from existence. Why would government want money that expires? To control economic behavior. Want people spending instead of saving? Set expiration. Want to stimulate certain industries? Make money only work at approved merchants and expire fast. Want to punish dissent? Give someone digital currency expiring tomorrow. Same amount of money, but now government decides when it's worth something and when it's worthless. Your savings could have countdown timer attached. Spend or lose it. Government chooses. Check your bank statement from last month. Imagine each transaction required approval first. That's CBDC reality. Control Mechanism 3. Geofencing. With CBDCs, money can have geographic restrictions. China tested this extensively. Digital yuan given to citizens in Beijing only worked in Beijing. Couldn't spend it in Shanghai. Couldn't transfer outside designated zones. The money physically couldn't leave geofence. Governments love this. Want to keep capital from leaving country? Geofence entire nation. Want to control regional economies? Different rules for different provinces. Want to restrict someone's movement? Their money only works in home district. Travel requires permission, showing up as geographic spending restrictions. No walls, no checkpoints, just money that stops working when you cross invisible lines. Control Mechanism 4. Programmable conditions. This is where it gets terrifying. CBDCs are programmable. Money can have rules attached. China experimented with money that only works at government-approved green businesses, money that can't buy imported goods, money that can't be used for gambling or alcohol, money requiring ID verification for purchases over certain amounts. The money doesn't just move, it follows rules, and those rules can change. Today, your money works normally. Tomorrow, government adds restriction. You can't buy gasoline because carbon rationing started. You can't withdraw more than 100 weekly because capital controls tightened. Your money still exists. Number and account didn't change. But what you can do with it changed. Instantly, without consent, without warning. 4 control mechanisms exposed. Transaction approval, expiration dates, geofencing, programmable conditions. All tested successfully in China. All ready for export globally. Think about last purchase you made. Could government have blocked it? Under CBDC, answer is yes.
Control Mechanism 5. Negative interest rates. This is the one economists get excited about. With cash, you can't have negative interest rates. If bank charges negative rates, people withdraw cash and hold it. Physical cash has 0% rate, doesn't lose value sitting in safe. That limits how much central banks can manipulate rates. With CBDCs, cash doesn't exist. There's nowhere to hide. Want negative 5% rates? Government just programs it. Your digital wallet loses 5% per year automatically. Encourages spending. Punishes saving. Complete control over monetary velocity. 5 control mechanisms. All implemented in China's digital yuan. All proven functional. All ready for export. And the export is happening right now. European Central Bank announced Digital Euro Development 2021. Pilot program launched October 2023. ECB is explicit. Digital euro will have spending limits, geographic restrictions, and programmable conditions. They're not hiding it. It's public policy. Target launch 2026 or 2027. United Kingdom Digital Pound announced 2023. Bank of England working with Treasury. They call it Britcoin. Same 5 mechanisms. Same control features. Launch timeline 2025 to 2027. United States is further behind, but catching up. FedNow infrastructure launched July 2023. This isn't CBDC yet, but it's the backbone. Instant settlement between banks. The architecture that makes CBDC possible. Fed says no immediate plans for retail CBDC, but that's politics. The infrastructure is being built. Biden's March 2022 executive order specifically calls for CBDC development. The policy is set. Only timing remains unclear. Globally, 130 countries are exploring CBDCs. That's 98% of global GDP. 64 countries in advanced development or pilot stage. Notice which countries announced CBDCs recently. The list grows weekly.
11 countries have fully launched CBDCs. China, Nigeria, Bahamas, Jamaica. The wave is building. 2025, 2026, 2027, launches accelerate dramatically.
and cash is dying simultaneously. This is not accidental. For CBDCs to work, cash must disappear. As long as physical cash exists, people have escape. They can withdraw, hold physical money, transact privately. That breaks the control system. So cash is being systematically eliminated. Sweden leads this. Over 80% of transactions are digital. Many businesses refuse cash entirely. Riksbank pushing e-krona CBDC. Cash functionally dead. India tried demonetization 2016. Modi announced 86% of currency invalid overnight. Forced digital transition. Chaos, but effective. Cash usage dropped permanently. Europe moving steadily. European Central Bank proposed €10,000 limit on cash transactions 2023. Some nations already have lower limits. Greece, €500. France, €1,000. Italy, €1,000. These limits tighten gradually. 10,000 becomes 5,000. 5,000 becomes 1,000. Eventually, 0. Once cash is functionally dead, CBDC becomes only option. Total control, total surveillance, zero escape. So why is this happening? Why now? 3 reasons. First, technology finally works. Blockchains, digital ledgers, real-time settlement. Infrastructure didn't exist 20 years ago. Now it does. Second, governments are broke. United States, $34 trillion in debt. Europe, drowning. Japan, over 260% debt to GDP. These debts can't be repaid normally. Default is political suicide. CBDCs allow new tools, negative rates, forced spending through expiration, direct control over monetary velocity. Third, control. Cash is anonymous. Anonymous transactions mean tax evasion, black markets, dissent funding, capital flight. CBDCs make all transactions visible, all spending trackable, all money controllable. Track how many businesses near you still accept cash. That number is shrinking. This is what Stage 6 looks like for currency control. And Stage 7 is coming fast. Stage 7 is when CBDCs become mandatory, when cash is completely eliminated, when every alternative is banned. China is there already. Digital yuan is mandatory for many government services. Private alternatives are illegal. Capital controls are absolute. Welcome to Stage 7. European Central Bank is explicit. Once digital euro launches, cash circulation will be limited. Businesses may be required to accept digital euro. Private digital currencies may face restrictions. Think about what this means practically. You criticize government online. Your digital wallet gets flagged. Social credit drops. Now you can't buy plane tickets, can't book hotels, can't make large purchases. Your money still exists. Numbers in account didn't change. But functionally, you're financially restricted. Or you own business. Government decides your industry is disfavored, carbon intensive, politically incorrect. Your merchant account gets restricted. Customers can still pay you, but transactions require extra approval, takes longer, gets flagged. Your sales drop. Or you're old and don't trust technology.
You want cash, but cash is gone. Businesses don't accept it. ATMs removed. You're forced onto CBDC. Banking becomes impossible. With CBDCs, there's one entity, the central bank, the government. No competition, no alternatives. You can't switch providers. There is only one. And if they decide you can't transact, you can't. If they decide your money expires, it does. No appeal, no alternative, no escape. Stage 7 means total financial surveillance, total government control. Bitcoin crushed through regulation. Gold transactions tracked. Barter criminalized. Compare this to credit cards you use now. At least you can switch banks currently.
So what do you do? First, understand holding only digital currency in government-controlled accounts is risk, not safety. Every CBDC gives government direct control over your wealth. This isn't paranoia, it's documented design features. Use cash while it still exists. Withdraw regularly. Spend cash. Support businesses accepting cash. The more cash circulates, the harder it is to eliminate. Every cash transaction is vote for financial privacy. Hold assets outside banking system. Gold and silver physically held. Not ETFs, not digital gold. Physical metal you control. Can't be programmed, can't expire, can't be geofenced. Bitcoin and crypto, but understand government crackdown is coming. Regulations will target anything competing with CBDCs. Use non-custodial wallets. Control your own keys. Not your keys, not your crypto. Real estate and productive assets. Things generating value regardless of currency regime. Farmland growing food. Rental property producing income. Businesses making real products. These survive currency changes because they produce real value. Jurisdictional diversification. Don't keep everything in one country, especially if implementing CBDC. Some jurisdictions will resist longer. Singapore, Switzerland, some tax havens. Diversification reduces single-point failure risk. Watch implementation timeline. China is Stage 7 complete. Europe is Stage 6, rolling out 2026-2027. US is Stage 5, infrastructure built, waiting for crisis to force implementation. 3 currency systems. Cash gave you freedom. Credit gave you convenience. CBDCs give government everything. 24 countries launching 2025-2027. Stage 6 transitioning to Stage 7. Your bank account is getting kill switch. Subscribe to track CBDC rollouts in real time. The pilots are public. The timeline is known. Will you position yourself before cash dies?